Hi, I'm Mike Capizzola from the Investing Channel, and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. This week, we're looking at the energy markets, but rather than the exploration and production of fossil fuels, we're looking at a business that operates in the so-called midstream of the energy sector, in the distillation, refining, and transportation of liquid gases and fuels. That business is Enterprise Products Partners. Enterprise Products is one of the largest publicly traded partnerships in the U.S. However, it's a business that you probably haven't heard much about before, despite it having a market cap greater than $50 billion. Enterprise Products Partners was IPO'd back in 1998 with assets of $750 million. And since then, the business has grown substantially, both organically and through acquisition. The partnership's assets were valued at $57 billion at the beginning of 2020, including 50,000 miles of pipelines that transport natural gas, gas liquids, crude oil, refined products, and other petrochemicals. The business also owns 21 natural gas processing plants and 25 fractionators, as well as 4 import-export terminals with a total of 19 deepwater docks between them. Their strategy is to capitalize on the growth in demand for natural gas and associated products while building its asset base through the acquisition of midstream, fee-earning assets such as pipelines. Enterprise Products Partners hosted a presentation for Wall Street analysts and institutional investors in early March, at which it highlighted a return on invested capital of 12% over the last 10 years and an enterprise value of $77 billion. That implies a 60% discount in the current share price relative to the value of the business. Enterprise Products has grown its cash distributions, which we can think of as the equivalent of dividends, for 22 years in a row, and it has an ongoing $2 billion share buyback scheme in place. Another telling statistic is that the management of the business owns 32% of the common units in Enterprise Products, aligning their interests directly with the external shareholders. It's notable then that the chairman of the business, Rhonda Williams, the daughter of the co-founder of Enterprise Products, Dan Duncan, has been buying the stock in March, purchasing a total of 677,380 common units at an average price of $23 a share for a consideration of $15.39 million. Rhonda Williams is a lawyer by training. However, she's been the chair of Enterprise Products since 2013 and a director of the business since 2010. Enterprise Products stock price has tracked the price of crude oil higher since the autumn of 2020 and is up 36% over the last 6 months versus crude's gains of almost 73%. In 2021 to date, EPD shares have posted 11 new highs, culminating in a near-term peak of $23.58, and the stock traded just below here in the last week. Wall Street analysts rate the stock as a buy, with 15 out of the 15 brokers covering the stock having a positive recommendation on it. Their consensus target share price is $25.29. Furthermore, according to Trackstar IQ, our proprietary search tracking tool, 20 institutional fund managers have researched this stock 36 times in recent weeks. With a vote of confidence like that from the street and substantial buying of the stock by a billionaire board member, Enterprise Products is a stock to monitor closely. Not least because it's the kind of business that could benefit from the reopening of the economy and trade both at home and abroad. That's all we have time for this week, but as usual, make sure to do your own due diligence before making any investment decisions. And to find out more about our Trackstar IQ data, sign up for our free newsletter at investingchannel.com/Trackstar.